Welcome, everybody. It is indeed markets in turmoil time. I am trying to help us put in the market bottom. That's why I put that headline in, because usually things turn around. So I am doing my part. I just need everybody to know that. My name is Michael Camo. I'm Director of Content for T3 Live. I'm here with my good buddies, Derrick Oldensmith and JR Romero. Our good friend Sami Abusaad should be coming on in just a minute. So obviously we need to talk about all of the craziness going on in this market. The tariff war is getting out of control. The VIX is over 50. Equities are in bear market territory. And we have a whole crap ton of news coming over the next 2.5 days. We have the bond auction today at 1, CPI tomorrow, PPI Friday, FOMC minutes later today. We have bank earnings. So JR, I'm going to pick on you first. Now, you were talking about the wild moves we're getting on these very short time frames, and you said something controversial that if you can't make it happen now, you never will. So what do you mean by that?
Not exactly what I said.
Fake news.
Here we go. No, here's what I said. I was saying that I'm very much appreciative of the wild volatility we're experiencing in the markets. Okay. And you look at days like yesterday where you're taking a sell setup and you're not catching 10 15 sticks in this boost. You're looking at 80 point moves in 4 minutes, 90 point moves in 5 minutes. These are extraordinary times for momentum traders, and obviously
yes,
a lot of people are suffering, but these are incredible opportunities for momentum day traders. And I was just rejoicing as we're getting our pirate on the last few days here.
Getting your pirate on. I want to get my pirate on. Okay, so Derrick, you were also saying before that you've never seen anything like this, and I know you've been through the COVID crisis, plenty of messes before. By the way, everybody in the audience, let us know where in the world you are watching from, because we invited the whole T3 email list. We just want to know where everybody is from. Yeah, so Derrick, is this really unprecedented action?
It's unprecedented first of all, just from a market perspective, there's all these fun statistics about how the 2-day move on Thursday and Friday was the 5th largest 2-day downside move going back to 1960. And you get all those, I saw that yesterday's move was like the biggest intraday reversal from highs to lows from the S&P ever, or something like that. I mean, there's just one fun statistic after the next. But what I really mean by this being unprecedented is we have never, in my career at least, seen these ridiculous policy issues cause an economic and market meltdown in the way that we are right now. I mean, this is the most ridiculous thing that I have ever seen. And I want to start by giving JR a big shout out. So last Wednesday we were talking, and I thought that the speed of the downside movement of the market was going to slow down. I thought that we could continue to go down, but I thought that it would be a slower move. I made the mistake of a strategy that has paid me very, very well over the course of my career is just analyzing what people's incentives are and making trading decisions based on those incentives. And it seemed to me that if the Trump administration was rational, what they would have done is probably announced 10% tariffs last week. And then as a matter of fact, if anyone remembers, Wednesday after the close, there was like a Wall Street Journal leak or whatever that said 10% tariffs were what it was going to be. And we very, very, very quickly ripped higher through the roof. And then Donald Trump actually got out there with this stupid board of numbers that are completely made up. They're not even at all like retaliatory tariff numbers. He literally made these numbers up. The formula doesn't make any sense. It's like a high school student came along and decided to invent this formula. And it was so much worse than anybody on all of Wall Street expected that he created the biggest sell-off ever. And I made the mistake of assuming that I was dealing with a rational person in the White House, because that's what I've always done throughout the entirety of my career. And by doing that, it's very clear. oh, if he does the 10% tariffs after what's priced in, the market's probably going to move higher. And even though it's bad for economic growth in the long run, we could potentially work our way through that. He comes out with these ridiculous numbers that aren't even based in reality, and you just destroy the market in a way that absolutely and utterly blows my mind. And JR was so on point last week when he said, you just wait, guys, you just wait. When he comes out and announces this, it's going to be a doozy and the market's not ready for it and we're going to get absolutely smoked. And he could not have been more correct. And now here we are in a dire situation for the economic growth of our country, for our markets, for Main Street and Wall Street. I think 60% of Americans own stocks and 100% of Americans have to buy goods and items. And we are putting ourselves in a horrible, horrible situation. And JR was right and I was wrong. And I got smoked at the end of last week as a result of it, because I was positioned for the rational move, and the rational move is not what we got.
Yeah, wait till corporate bonds start to break and we have a real credit problem.
Okay, I'd like to point out that FBI security is watching us, so I want everybody on their best behavior. That includes you people in the comments section. Everybody, keep it classy today. This is not the time to screw around. Okay, Sami, what do you think of this environment? I know you've been issuing like fewer swing trades. Are you doing anything different now?
I'm doing a lot of scalp trades. We've been hammering the IQ in the room. So one of my specialties is actually level 2 scalping. So I look for imbalance on the level 2. So when the offer stacks up and the bid is very, very weak, then I look to short the bid, and vice versa. If I'm playing long, when the bid is very strong and the offer is very weak, you can find a lot of YouTube videos on that by me. So we've been going to the IQ every day the last 3 days, and it's working marvelously because it has a very deep level 2, and so we've been doing that a lot on an intraday basis. As a swing trader, there hasn't been much, and that's one thing about bearish markets that I don't like, is when they drop, they don't, when they start to pull back, they don't just come in slowly. They crash really hard. So if you have swing positions on board, great, keep them. But it's very, very hard to initiate, to start new positions, because the overnight, you get overnight gaps and crazy volatility. So on the swing trading front, it's been really slow. But on the day trading side, level 2 scalps seem to be coming back to life. So I'm excited about that for sure.
Okay, I think we absolutely need to talk about the bond market. A lot of people are focused on this auction today at 1 p.m., which is 48 minutes from now. Now, Derrick, it does seem like everybody was talking about yields overnight. Do you think if this auction bombs, we could see like a big whoosh down into the close today?
Yeah, absolutely. This is a really important auction. If you look at the chart of the TLT, this is here added to the list of historic moves over the course of the last 4 days from that high to where we are now. I've always found the bond market and how it trades with the equity market to be fascinating, because it constantly changes. Sometimes it's like higher interest rates are bad. Sometimes they're good. Sometimes lower interest rates are bad. Sometimes lower interest rates are good. It's all based on the narrative. And for a good bit of 2025, we were seeing the TLT move higher at certain points as a fear trade. And that fear trade, TLT up, which means interest rates down, was leading to the market move down. Whereas in 2024, when the TLT was moving higher and interest rates were going down, that was a good thing for the market, because it was like, oh, interest rates are coming down. That's good. And, small caps and mid caps are going to be able to refinance. Now, once again, the whole equation just switched again 4 days ago, where TLT is selling down with the market. And there's a lot of speculation out there on what the cause is. Part of it could be just when you hit certain points in a bear market, they begin to liquidate everything because they need to raise cash. So it's like you're getting that margin call from your broker or whoever. You need to sell something else, your gold or your Bitcoin or your treasuries or something like that to be able to raise cash. It could be hedge funds that are just de-risking, Or it could be China, which holds like, I think, a bit under $1 trillion worth of our treasuries, selling some and using that as a further political tool right now in the ongoing conversation. But what we're going to see at 1 o'clock today is the demand or lack thereof for our treasuries. And a lot of that is going to stem from the actual international market to see if it's there or not. So we're going to see if they're coming in and they're still willing to buy the United States, or if they go somewhere else with it. And if they go, they still have dollars, so they have to go somewhere with it. That's one of the benefits, by the way, of trade imbalances. Like, the whole, people don't understand how trade imbalances work. It doesn't matter at all if we have a trade imbalance with another company. They give us stuff that we use. We give them green dollars that basically gets inflated away, or they have to reinvest in one way or another into the United States. They do that oftentimes by buying bonds. That's why China and Japan and so many of these countries hold so much U.S. bonds. It's a virtuous feedback cycle that actually benefits us in many, many ways. So now we're going to see if these foreign countries still have a demand for bonds right now or not. And if they don't, and you see this TLT continue to crater, I think at a certain point that'll also further read through to the market, and we'll get a further sell-off in the market. And the Fed might have to step in. And that's the big question. Or if this goes well at 1 o'clock, you could very quickly see the market catch a big bid. I actually, and we can get into this further in a minute, I'm sure you'll have questions on it, I really prefer the market long right now than I do short in the short term. And I mean like days at this point. You know, we got to take it day by day. When you get the VIX up to almost 60, when you get the market that is almost as extremely oversold as I've ever seen it in my entire career, more oversold a couple days ago at lows than at any point during COVID. And remember what happened during COVID? The whole world shut down, and we were able to get more oversold than that. I got to buy it. I buy that extreme extension. I buy VIX 60. And we're also seeing an intraday. The big thing I've been pointing out is when you see good news hit right now, the reaction higher has become much more significant than when bad news hits and the reaction goes down. It isn't to say that we can't get bad news and that we can't go down. It just, to me, means that the risk in the short run right now is actually to the upside, and I would rather be long than short. But we got to see what happens at 1 o'clock. It's going to be a big deal.
Okay, JR, again, we're coming to this like 2.5 days of heavy news. Do you think it's even worth trying to pick a direction here?
In the 5 or 15 minute time frame, maybe. I live in the 15-minute chart. I live on the corner of 15 minutes and fair value. That's my new address.
So you say you live your life a quarter mile at a time? Is that what you're saying?
Yeah, baby. I'm in live in the back of a trailer mode. You know, I'm in a van down by the river. Look, I'm completely on the same page as Derrick. I told my room the first thing this morning is forget everything else. Today's main event, okay, the heavyweight title bout is at 1 o'clock, okay, and we get a weak bit to cover ratio today, and forget it. Like, seriously, forget it. We're going to undercut yesterday's lows. Okay. So we could be in another precarious situation, despite how, overextended we are. We still haven't hit my, last week I said the market's very likely heading for a D leg. We're in that D leg now, and we could hit lower targets off of a bad auction. So completely agree with Derrick. What I'm telling my traders is to keep things really, really simple. When you're in a markdown period, okay, and you've got wide ATRs, trade the trend, okay, and when you're in a resting period, trade fair value, okay, top of value area high, bottom value area low, and don't diddle in the middle. You're going to get chopped up. That's it.
Okay, everybody, no diddling in the middle. Got it. Okay, Sami. Last week you said that you thought the market bottomed, but if we took out the prior day's low, I believe you said we could go further. Are you still feeling bearish since we lost that low big time?
Yeah, I actually said was it Thursday morning before the market opened that the gap down in the market might have been the single most bearish gap down in the market that I've ever seen. I said that before the market opened because it's true. Can I show the charts real quick?
Of course.
All right. So let me know when I'm on. It says take a look. No, my charts are not. Oh, I need to present. Oh, my
Yes,
bad.
yes, sir, you do.
I do, don't I? So hold on 1 second. Here we go. All right. So basically the market had a couple of big green bars. I thought, maybe this is the bottom, but I said these were my exact words, by the way. I said, I think we bottomed, but what I know for sure is that if we take out I don't know. I said, I don't know if we bottomed. I think we might have, but what I do know for sure is if we take out that bar's low, then we're much lower. Now on the gap down, so those were my exact words last week. Now on the gap down, we didn't just take out that day's low, we took out the whole thing, and we took out all support. And so you have to think about the psychology of people that bought 3 days in a row, got heavy long, and then the next day, every single person, every hedge fund manager, every novice trader, every professional trader, big, small, whatever, dumb money, smart money, every single person that bought and held was underwater big time. And so I said on the mic that day in the pre-market that this might have been the single biggest, single most bearish gap down. And I meant it. I meant every word. Somebody said, I think the market is overreacting. I said, it's not. I think it's not reacting strongly enough to this gap down. So those were my exact words. And then we've collapsed since then. Now, what do I think about this? I think we're lower. All you have to do is look at the IWM. I mean, look at the IWM. It's at the lows. So I think we're lower. The fact that yesterday was a gap up that got negated, that we were up like 2%, and then we closed down 2%. That's all you need to know, basically, to me. If we hadn't gapped up yesterday and then just came in a little bit, then it could have been just a shakeout. We actually gapped up. We were up, I think, 2% or so to close down almost 2%. That tells me we still have more to go. The IWM is actually, for the first time ever, the cleanest chart. And it looks like we're headed down to the 160, 162 low from last year, from 2023. So that's the next target on the IWM. The Qs and the SPY, I think, need to base a little bit. I think they need to base a little bit before continuing lower. And the next target area would be so today is what, Wednesday, Tuesday, Monday's low on both the Qs and the SPY. But the trend is down. I'm always betting on the trend unless it gets climactic. It's not climactic at all. This was just a brand new gap down. If we had continued this sell-off and then we put in this kind of a move after this sell-off, right immediately after, it would have been a different story. But we went sideways, we tried to go higher, and then we gapped down, and then we gapped down again. You don't use up sellers when you gap down. You don't burn fuel when you gap down. You only use up sellers through continuous selling. So we actually, this is, so with the gap downs, they're not as extended as it looks. So I think, to me, the market looks slower, short term, long term, every term you can think of. But it is messy. It is sloppy. The bars are huge. It would be nice if we can consolidate first and then, sell off maybe next week. That would be actually my preference for the market. We'll see. But yeah, it's an ugly market for sure.
Okay. All right, I'm going to throw a question out to the audience. I want to see, is anybody out there actually buying? Because every sentiment indicator, we could look at the VIX term structure, CNN, fear and greed, AAII. Everybody out there seems bearish. But I'm curious, let us know, is anybody actually buying? Type 11 in the chat if you are actually buying stocks today. Okay, JR, we've talked a lot about gold and metal, and they're going hard today. Like, all right, hypothetically, let's say, so 37 minutes from now, the spot auction hits. Let's just say it's crap, it fails. Do you think gold and silver could just like keep on zooming?
It looks like it to me. The thing is, as Derrick mentioned, they're selling everything that's not bolted down right now to cover for a lot of these margin calls. I don't see why it couldn't potentially also affect the precious metals. This is a really hard market to call, and it's like I tell my guys, keep it simple, do what the chart says to do. Okay, don't try to outthink the smartest people on the planet. You're going to fail. Okay, Jeffrey Gundlach's probably walking back to his office every day, series of expletives, just telling people like, why can't we figure this out? Like, this is a really complicated market. Don't try to outthink the smartest people in the world. It's not going to work. Where you have an edge is the actual chart. Okay, chart, order flow tape. Keep it simple.
And if Jeff Gundlach is listening, we can give you like 20% off of VTF if you'd like to join, Jeff, if you need some help. Jeff. This is only for Jeff Gundlach. Nobody else can have this deal. info@t3live.com.
And he gets access to Sammy's watch list. I mean, Presto.
Yeah.
There
all right.
we go,
we are going to talk about watch lists in a little bit.
Dear.
I don't have anything today.
All right. But we do have something big to talk about. It's bigger than the bond auction. It's bigger than CPI. It's bigger than PPI. It's bigger than bank earnings. It's burger toppings. We've been having a lot of problems the last few weeks. Some people have been making some very poor decisions here. I've heard some very, very awful things being said, including pineapple on pizza. So I'll start with Derrick. Derrick, what are the best toppings for a burger?
So I'm generally the type of person who will eat literally anything. I've tried some weird stuff over the years. I remember being in Inner Mongolia and they slaughtered a goat and they had the brain cooked in the skull and everybody was eating some. So I tried some because you only live once. So
this is how zombies movies start there. Come on, man.
So with that said, one of the couple things in the world that I don't like and like really won't eat is pickles and olives. I don't do pickles. I don't do olives. I don't want pickles on my burger. Besides that, you got to have cheese. I'm open-minded on what the cheese is, by the way. It could be American cheese. It could be pepper jack cheese, cheddar maybe, but no pickles. And, you get me maybe some tomato, but it's got to be – I don't want them like white tomatoes that look all crappy. I want those like little cherry tomatoes that are looking juicy. Throw a few of those on there. Throw some onions on there. And no pickles and some cheese and we're good to go. And preferably like a double smash burger as opposed to like one of those thick guys. But I'm open-minded.
Yes, everybody in New York City, go to Hamburger America. It's the best. Okay, JR, how about you? What belongs on a burger?
Lettuce, onions, pickles, and tomatoes. I mean, you gotta. I'm a Jewish guy, so to me, the cheeseburger is the forbidden fruit, the unknown foreign land, and I've never taken the apple off the tree, but that's the 4 food groups: lettuce, onions, pickles, and tomatoes.
Okay, Sammy, how about you? You're ordering a burger. What's on it?
Almost. I mean, I like everything, but my favorite would be caramelized onions or, just grilled onions. It would be my favorite topping. But I'm not a burger guy, so I don't care. Just give me anything. We'll make it work. When I'm hungry, I'm hungry.
All right. Owen Zero is saying pineapple. Obviously, a grilled pineapple actually works great on burgers. No joke. But I'm going to override everybody. The best burger, you literally should put a bacon, egg, and cheese on the burger. You need cheese, you need bacon, and you need a fried egg because you need that runny yolk. So once again, I'm declaring myself the champion.
I love the egg idea. I should have mentioned that myself. You got to have the egg on there. I'll pass on the bacon, but the egg is the story. I
do want to have goat brain. I feel there was a little showdown in the Momentum Express VTF yesterday talking about goat. Goat is an awesome meat. I think goat is the most underrated meat out there. I don't know about the brains, but
how do we get here?
I heard that Derrick was struggling in his trading until he ate the goat brains, and then like he got the goat toughness right inside his head. And is that in compliance? Can I say that? Will compliance approve that? Can we say that Derrick got better because of goat brains? I don't know. Okay,
You want
all
it
right.
to be the GOAT,
Yeah, it
the
works.
greatest of all time.
If you want the brain of the goat, you have to eat the brain of the goat. Okay, all right. Now, the big question is, like, what the hell should we do now? Like, we got the bond auction, CPI, blah, 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 blah. Is there, I'll just throw this out as a blanket. Whoever the hell wants to jump in can jump in. Is there anything worth buying here? And it's
so.
okay. It's okay to say no.
I think so. I don't think you had a whole lot of 11s when you asked that question before, but I will. I'll give you the 11. I'm doing some cautious buying. Nervous of what's going to happen at 1 o'clock, and anything can happen at any time. But I think maybe for the first time this morning, we saw a hint of the Trump put. He came out there this morning and he said, buy the dip. He came out there this morning. He said, we're going to be doing negotiations. Up until now, he came out this morning and he said, get ready for the tax cut bill. Up until now, we haven't seen a single positive thing come out of that guy's mouth that could positively influence equity markets. Not a
He also
single
said,
thing.
"Be cool," which I thought was hysterical.
But it's the first time that I think that we're beginning to see an inkling of the Trump put, and it's happening at a time when he is getting bombarded on all sides internally, which I do think is important. You're seeing Elon Musk get out there now and start to fight these guys a bit internally because as much as I've had my beefs with Elon and Tesla, he's right. Tariffs are stupid and these need to go away. So you're starting to see that from Bill Ackman, who was a big Trump supporter. He's going on rants and raves about how this is ridiculous. You're seeing it from Stanley Druckenmiller. Stanley Druckenmiller has a lot of influence over Scott Bessent. They're both George Soros guys. So you're seeing it from Dan Loeb, from one person after the next who is smart. Jamie Dimon, there's another one in there. One smart, influential person after the next, many of whom have been big Trump supporters up until this time, are starting to turn them on this because they're smart enough to know how terrible tariffs are for the global economy, for the U.S. economy, and obviously for the stock market. And you just got a couple diehards in there like Trump himself who are still being for this. But I think this morning, for the first time, we began to see a little bit of an inkling of a Trump put come out. He easily could give us a headline that could rip this market higher. And I would rather be long than short at this point with this degree of extension. But I'm taking it not even day by day. I'm taking it like minute by minute at this point because this story is evolving so rapidly and so quickly that what I'm telling you right now could change at 1 o'clock. It could change even before 1 o'clock. So, but I'm a buyer at this point.
Okay, very brave. JR, what about you? Should we just sit and chill until 1 o'clock?
Yeah, probably. Look, people are trying to play this market as if it were other markets. Okay, remember that game with the money booth and an air jet where dollar bills are just going all over the place, and whoever can cash the most money gets to keep the money, and it's utter freaking chaos. You know what I'm talking about? It's like one of these game shows. Anyway, so I feel like we're in one of these markets. You know, yesterday you were having legs down in the S&P 70 to 90 points at a time. Today you're having these, really scalpable moments in the market. You're just in this weird time that's unsettled. And in the meantime, you have this volatility and it's free money. You're in a money booth, grab the money while you can, take the money and run. And when the market picks a direction, you can start to trade trends again. But right now, trying to swing trade and pick bottoms and pick trends is a fool's errand, in my opinion.
Okay. And Sammy, I think I'll give you the final word. The Sammy buy list.
What to buy?
Yeah. Has the Sammy buy list finally emptied?
It has. I mean, gold is pretty good still. Am I showing my chart?
I'll bring him up.
Okay. So this is the chart of GLD, the daily chart of GLD. That's pretty damn good. I mean, that's an uptrend. Tried to break down, shook people out, only to gap up today. That's pretty good. So the thing to do would be to find some gold and silver stocks. I haven't scanned, honestly, to see what, like this one is gapped over a lot of red bars. If we can get an entry on the HMY. I haven't scanned, I haven't done any scanning yet, but that's where I would look, is for something to buy in gold and silver. I noticed the X is staying pretty bullish, so clearly they're expecting something, like some kind of a deal on X, a buyout. So if this takes out, I'm watching it. If this takes out 45.50, this could be an interesting buy opportunity. But really, the only sector that I know of that's kind of a decent buy right now would be gold on the next pullback, or if we can just base a little bit. So something in gold, or maybe that X, if it can take out 45.50. So, but other than that, I don't think there's anything that's on my radar. I have some climactic watches, things that are down a lot. I'm just waiting for a reversal bar and for the market to stabilize a little bit before playing them long. But otherwise, really, I don't have anything that I'm interested in buying.
Very sad. My heart has been broken.
Same here. Same here.
Okay. Everybody out there in the world listening and watching, I don't know what to tell you. Good luck out there. Hold on to your hats. And hopefully we'll be back next week if FBI security doesn't stop us. Okay. Everybody, good luck out there. Hopefully you make some money. Thank you, guys.
Have a great one, guys.
Thanks, guys.